And nobody talks about it, but the AI bubble is showing major signs of weakness right now. It pumped a little last night, but almost every AI stock is down 10 to 40% right now. So fine is a bit of a stretch. And the job market is the last thing to usually break. By the time unemployment numbers turn, the damage is already done. This is usually because unemployment is a symptom of a recession, not really a cause of a recession. I mean, it's a bit more complicated than that, but that's a simple explanation of it. Then there's other comments saying, okay, but they'll cut rates the second anything breaks. They always do. Maybe that's true, but Warsh already told us twice that they won't. So if he actually holds the line, then we see something from the Fed we haven't seen for a long time. But either way, I don't want you taking my word for any of this. So there are two bits of evidence right now that, don't rely on just my opinion. First, the Fed's record. So Warsh and his gang have every reason on earth to keep you calm. The central bank can't afford to frighten public. So don't watch the FOMC press conference, because the press conference is the public-facing part of it. Watch the meeting minutes. That is the inside notes from the room when they actually talked about these decisions. So their June minutes show some officials wanted to hike interest rates. An insider's job is to keep the economy stable, and they want to push rates higher in a tight economy. So they've stopped wanting to keep things stable and doubled down on fighting inflation. Second is the housing market. Housing affordability in America is now the worst it's been since the early 1980s. The last two times the Fed held rates this hard for this long, you got the early 1980s and then you got 2007. You already know how the 80s went because we just talked about it, and most of you know how 2007 to 2008 went. For those who need a reminder, by the way, in 2007 the Fed held rates high into an economy that was already slowing. Housing had started to roll over. Then autumn of 2008 arrived and the global economy was set on fire. Global financial crisis, it was horrible if you lived through it. Put today's economic data next to the summer of 2007 and we're standing in almost exactly the same spot. We're not at the fire yet. We're at the bit just before the fire where people in charge are still telling you that everything's under control, it's all fine, don't worry. And look, I'm not telling you that a crash is guaranteed, by the way. Anyone who promises you that they know what happens next is lying. What I'm telling you is that the picture we're seeing now is one we've only seen twice, and both times it's ended with ordinary people getting hurt. Even the market darlings are twitching right now. The AI names everyone swore could only go up have been sliding down for weeks. Many are down 20 to 30%, some even 50%. Yeah, they pumped a little last night, but they're still down very, very bad. So the risk is real. Let me tell you the other side of this argument though, because I don't want to just present one side of the argument. I could be wrong about all of this. Warsh might bail out. He might just be putting on an act, pretending he's the second coming of Paul Volcker. Then he stops short of actually raising rates. That's totally possible. They're talking about raising rates in September. We'll see when September comes around if he's the real deal. Before he was nominated, FOMC members felt like he was just a puppet for Trump, who would just cut rates whenever Trump asked. Maybe this is just Warsh acting independent to get the committee off his back, and then he ends up cutting interest rates anyway. Gun to my head, I would say that Warsh is probably still going to chicken out, but there's zero guarantees of that happening, so we don't know. We just have to wait till September and see. But if he doesn't, the market is in for some bad times. But that's not a bad thing for us if we're prepared. So the people who came through 1981 in one piece didn't magically catch the bottom of the market. They just understood what was happening and how to position themselves. These days, everyone wants to be a hero who's called the exact bottom, but it's virtually impossible to do that. I've not done that once in my 25 years. You know what? That's not true. I've done it a few times, but it was just random luck. It wasn't because I'm special or anything. My buys are almost always a bit early, and my sells are almost always a bit early too. That's just how the market works though. But see, I can admit that because I've been in this game for 25 years. I know how it really works, and I don't have to sit there pretending I'm some kind of genius who can call the bottom of every single move. That's just not how it works. Quick thing before you go, I've written a free guide called How to Retire Before 2036. It's a full 10-year plan for anyone starting late. Get out of debt, invest properly, retire on time. Free download, link in the description.